Carol Massar, you're smiling. The market is
because it's Friday.
No, yeah, it is Friday. Thank God. Yeah, I know it's kind of a funny market. I keep thinking about this story that was on the terminal about Goldman and Citi seeing Europe's economy powering the stock rally, and it made me look at the MSCI Europe Index. It is up about 5.5% year to date. S&P folks just up about 1.5%. So it'll be interesting to see if this trade takes us all the way till the end of this year.
You're already thinking about the end of the year?
Yeah, I am.
Okay, I'm just thinking about next week and what we hear from Jay Powell on Tuesday and Wednesday when he's on Capitol Hill. Are we going to hear anything different than we heard from him on Wednesday when he was at the press conference? Are the lawmakers going to get any additional answers out of him?
Certainly, he's not going to settle the debate between Chris Waller and Harker, right? Like, that's not going to be resolved in his two appearances on Capitol Hill. I just think about the number of people who have said the stock market is priced to, be kind of best case scenario, even with this wall of worry that we face, whether it's geopolitics, whether it's trade developments, whether it's continued U.S. pushes to, restrict technology to China. There are all these things that typically would sink a lot of sectors, but isn't really.
Yeah, we had a guest on a couple of weeks ago, I thought put it best. He said kind of the best case scenario has already been priced in and the worst case scenario has actually been priced out. And that was his rationale for why we've been in such a tight trading range. We were in a tight trading range this week. In fact, I'll double check these numbers, but this actually might be the tightest trading range on the S&P on a weekly basis all year long. You see that reflected in the daily numbers on your screen with the Dow Jones Industrial Average hugging that 42,200 level, up about 30 points or just about 0.1% on the day. Meanwhile, the S&P closes once again below that 6,000 level, down about 13 points or 0.2%. The NASDAQ indices each down roughly about 0.5% on the day, while the Russell 2000 is going to close out the day lower by just about 4 points or about 0.2%.
All right, back to the S&P 500 I go. And folks, a little bit of a more positive tilt. Scarlett, you've got 298 names in the S&P 500 gaining ground on this Friday, 202 to the downside, 3 unchanged.
All right, let's take a look at the IMAP. Pretty much a mixed picture there as well. You've got 5 sectors in the green, 6 are in the red. The worst performances are communications services companies down 1.8%. After that, materials and healthcare each losing about 0.5%. On the upside, energy stocks gaining more than 1% on the day. Consumer staples and financials also finishing higher.
All right, to the individual gainers. Kroger, number 1 gainer in the S&P, nation's largest supermarket operator. Sales surpassing expectations. Comp sales coming in better than expectations, too. This is during the latest quarter. So consumers are still spending on groceries and other essentials, even amid economic turbulence. So the company raised its full-year guidance, reaffirmed the rest of its outlook, citing an uncertain, though, macroeconomic environment. So Kroger, as I said, number 1 gainer in the S&P 500. That stock up just shy of 10%. CarMax, an outperformer, up 9.5% at its highs, finishing with a 6.5% gain. Number 3 gainer in the S&P 500 reported first quarter comp sales and earnings per share that beat consensus estimates. Stock, though, is still down about 17% year to date. 8% of the float is shorted, so there's still some investors certainly with a wary eye to that one. GMS, this one up almost 24%. This company definitely in demand. Home Depot making an offer for the building product distributor, possibly setting off a bidding war with QXO, which this week made a $5 billion offer for the company. The Wall Street Journal reporting this out initially yesterday. QXO has come out and said it will not raise its $5 billion offer for the company. So keep an eye on this one. We'll probably watch that into next week. And I
love a good old-fashioned bidding war. I guess it's not a bidding war if QXO doesn't do anything, but close enough.
Okay, close enough.
Yeah.
We're gonna at least go with it. This is what I'm doing because Tim's like, Carol, you have to do Circle if you don't do anything else. Oh, wow. Circle Internet up another 20% today. This is the company behind USDC, second largest stablecoin by market share. Its shares rallying again in today's session. It's up about 670, maybe 70%. I meant to check the DES screen. It is up a lot since its IPO earlier this month.
We'll just round up, 700%.
Seaport Global, that came out and gave it its first buy rating in the wake of the U.S. Senate's move this past week to pass legislation setting up regulatory rules for cryptocurrencies pegged to the dollar. So, yeah, a super outperformer here. You're welcome.
About time you
You're
did
welcome.
Circle, okay?
I know,
It's been
you're
up like every day.
He's been on my case.
I have. Hey, I want to get to the decliners. NVIDIA shares falling today by about 1.2%. I watched shares of chip companies after the Journal reported that the U.S. Commerce Department, or rather an official in the U.S. Commerce Department, has told top semi companies that he wants to revoke those waivers they've used to access American tech in China. We saw Lam Research fall, Applied Materials, KLA. They were among the biggest decliners in the stocks. NVIDIA, though, also falling today about 1.2%. Also, keep an eye on shares of Accenture. They were down as much as close to 11% after the company reported results. Analysts highlighted bookings as a weak spot. Bookings were down 7%. Bloomberg Intelligence says that decline lower suggests soft discretionary IT demand. The CEO in the earnings call, Julie Sweet, said the company, quote, continues to see a significantly elevated level of uncertainty in the global economic and geopolitical environment as compared to calendar year 2024. Interestingly, though, as opposed to what we saw with Booz Allen a few weeks ago, the company said that the federal business division had an immaterial impact on the overall growth of the quarter. Shares down 6.9% today. And finally, Smith & Wesson Brands. I didn't realize this was such a small market cap company. It's like $380 million company, $386 million company. Shares down 20% today. They reported adjusted earnings per share for the fourth quarter that missed the average analyst estimate. The president and CEO, Mark Smith, said, looking at the overall firearms market, we continue to see consumers generally being cautious due to macroeconomic factors pressuring discretionary spending. So people are pulling back on all kinds of purchases, I guess, at least according to the CEO of Smith & Wesson.
All right, let's take a quick look at yields here. Modest declines across the curve here on this Friday afternoon. We should point out, on a weekly basis, it's really the short end of the curve that saw most of the action. Seeing yields there drop for a second straight week. Meanwhile, on the longer end of the curve, 10 to 30 years, you actually had an increase in yields here. So a steepening of the yield curve. In fact, the biggest steepening that we've seen in about a month on a weekly basis. And that, of course, is the setup heading into next week and beyond as folks, Carol, start to refocus in on macro conditions and especially on the labor market.
Yeah, and so well set up for what we want to talk about because July 3rd is our next monthly labor report. And we saw a story about what's going on in terms of consultants to the U.S. government. And we talk about thousands of private government consultants are flooding the labor market after being laid off during the Trump administration's cost-cutting efforts. We're talking about job postings among 7 consulting companies singled out by the General Services Administration for contract cuts are down 27% since 2023 and 11% lower from a year ago. And you just wonder how this all starts to trickle into some of the labor data points and the impact on the economy.
And that includes Accenture, which I think which Tim was just talking about. But I'm curious, too, as somebody who lived in Washington, I mean, the ripple effects of this can be pretty enormous.
Exactly.
I mean, this is a huge ecosystem. Remember, it's not just that one person's job, but it's everything that sort of goes into supporting the communities around that. And if these people are out of work and you're seeing less activity, I do wonder what that means for the region.
Look, I heard just this anecdote a couple months ago about somebody who did lose his job as a result of DOGE cuts. He was mentioning that at his kid's school, there were several households where both parents had lost work because one was a consultant. But these are all in the D.C. area. And you saw, but the question is, and since then, which of those jobs have actually come back at this point? And also, I mean, is there demand in other sectors or other industries for these folks who aren't necessarily finding it with these consulting roles that for so long seemed really consistent and, were there all the time?
Yeah, these are open questions, and it's going to take a while for it to all shake out, but it's certainly really devastating news for those who are affected, especially in that region. We've got another story that we're keeping an eye on here, and, Meta has done a really good job with these smart glasses. They're Ray-Ban smart glasses that our senior producer, Queenette, wears around the office all the time.
Does she?
Yes, oh my gosh. Whenever she's talking to herself and walking around with glasses on, it's because she's wearing those AI glasses. Well, Meta is now launching these new smart glasses models with Oakley, which is aimed at athletes, and they're going to enable video recording. They also have water resistance. There's a quote from a Meta executive who says that he's seen a lot of performance use cases with the Ray-Bans, like people wearing them on roller coasters, cycling, and being around water. Can you imagine wearing these things like on the roller coaster? They're like $400 if it falls out.
You just got to hold on to them while you're wearing them. Matt Miller was talking about these earlier today on Open Interest, and he did not think these are cool looking. I hadn't seen pictures of them when I was hearing him talk about them. These aren't bad. They kind of look like the old school Oakley frog skins from like the 80s and 90s. Remember, Luxottica owns Oakley. Luxottica also owns Ray-Ban.
They own everything.
They own everything. They don't own these glasses.
They don't own
these
yet.
glasses.
Not
Right, so
yet.
you have the 2% of the addressable market.
Yeah,
there.
so it's the same parent company.
Yeah.
It kind of makes sense that this partnership happens.
Yeah.
Remember GoPros? Like this was
No.
the whole idea of GoPro.
So-
but I think this works.
Yeah, but I think the thing, though, that's smart about what Meta has been doing here is the idea of just, if you're going to take this technology, just make it look like a normal product. Like, we don't need a futuristic headset or something like that.
Yeah.
I mean, we can talk about whether
Like
you think
Apple
Oakleys are
Vision
cool
or-
or not, but it gets to this idea
So this way, when
that
we're
if you make it
recording
look
you,
like
nobody
something-
knows that we're recording you,
I would
right?
never talk
'Cause
to
they look
anyone wearing
normal.
glasses from this point forward, because you have no idea. See,
Exactly.
I'm recording you right now.
There's
Say it again,
supposed to
Kinda
be a light
creepy.
that goes on with these.
There's no light. I blacked
There's
it out.
supposed to be a light.
I blacked it out.
It's
All right,
creepy.
tap
I
right
got you.
now.
It's creepy. All right, guys, that's a wrap.
Going on TikTok tonight.
Have a good weekend. Our cross-platform on radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Romaine and Scarlet continuing there on TV. Tim and I continuing right here on Bloomberg Business Week Daily on Bloomberg Radio. We'll see you again, same time, same place on Monday.